Hello everybody, welcome to today's EOD daily EOD market recap for 6 February 2017 and potential auction paths. I'm using Bell market profile and Bell order flow for my analysis. You can visit for more software details at www.belltpo.com. You can get in touch with me on Twitter or you can visit my website getthattradingedge.in. Before I move on, let me just go through the disclaimer. Information shared here is not a trading recommendation and we are not in the business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. There was one question from Tutul, and the question is, can you elaborate the concept of price hitting the open area when the P and D or B shapes are formed in MP? Yeah, sure, we'll take that up. So let's go to the charts. Here is today's chart. So let me first draw this. So this is a combined composite profile for last 2 days, and you can see a nice bell curve forming, a sign of balance, and we had a nice uptrend going in before this balance happened. And we always know that balance suggests that there is a that the sellers are now matching the buyers. And since we had this uptrend going into this balance, it means that the buyers have been at least matched in power by the sellers now, and both are on equal footing when there is a balance forming. So whenever there is a balance, market profile tells us that you need to go with any breakout that occurs from that balance. Now today was a gap up, market opened nicely higher. Then after opening higher over here, we came back lower below this support of 8,800. Since it was a resistance earlier, but since we opened above it, the resistance became support, and we came down, tested below that particular level, found nothing, and again moved higher. So again in B period, if you can see, we tried to test that level once more, but again there was no follow through by the bears to the downside. So it meant that this breakout has been accepted and we might test higher levels. But then an interesting development occurred. If you can observe the shape of this particular profile till the G period, is a distinct P shape. Now we know that P shape means old business. So this early move at least had a majority of participants covering their short instead of creating new longs. So whenever this happens, it means that the market had stuck shorts from this particular 2-day balance, and when the market gapped up, they ran for cover and covered their positions, and there was no new buying, hence we could not see continuation higher. So this was till G period. In H period, the market attempted a breakout. Now we all know that on any breakout, there will be some stuck players who will try to get out, and that leads to this P or B formation. If we had a breakdown, we might see a B formation, and if the trend has to continue in that direction, we need some fresh buying, some new players entering the market to take the auction in the direction of the trend. But what happened here, we did try to break out from this P, but could not find any support at higher levels and immediately traded back down. So you can say that this was a kind of a failed auction. Also, the IB high was not taken out till H period. So you can say this was a failed auction of the initial balance high also. But what I see is that we had this nice balance going after a breakout, and then we tried to continue higher but found nothing. And this particular development where prices gapped up, sustained above the gap, but still could not find any continuation. So what is happening? C period, E period, F period, G period, we tried to rally in every period, but could not take out the IB high. So this particular condition of the market is also called as market getting too long, as in there was no new player left to buy, or the long term players were not interested in these higher levels, so they were also not buying at these levels. We all know the first rule of smart money is to buy low and sell high. So this was a high price according to them, so they were not interested, and hence the market could not go higher. So what the smart money did was just mark the price high enough to take out any stop losses of weak shorts which were created in this region, and then they gave up and the market fell sharply down. So this particular break, as it turned out at the end of the day, was just an inventory correction break, and we still are not sure whether there is a top in place or not, because we did take out the low of the morning initial balance, and this particular inventory which had gotten too long was corrected by this fall. Any eager buyers in this region who were thinking of a breakout to higher levels were forced to liquidate their position. We took out any stop losses which were there below the morning low, and then immediately reversed back up. So in the process, we could not even close this gap properly. The gap is still open. So what it means is that this particular breakout is caused by some strong buying, which was not interested in marking the price up immediately. So they just ran the stop losses of any shorts here, pushed the price down, also forced the premature early longs to cover, and then they they might have accumulated in this break and again marked the prices up and closed in this particular value. So if we clear everything up and merge this, right? So again, if you can see, this is not a very clean balance, but we do have some rejection at the top, some rejection at the bottom, and value in the middle. So again, if you see that there is no clear party which has an upper hand, apart from the fact that we have gapped up and we have held the gap. In this late correction, we could not close the gap or even close at the lower level, so that any buying that happened in this region could have been put under pressure. But now, since we closed in the value, it is in balance. So neither are the buyers very anxious nor are the sellers very anxious, because both see the price closing in the value. Whatever average selling and buying prices traders have in this range, price is almost closing there, and that's why everybody hopefully is going home break even. I'm saying the average. Certainly somebody who has bought in this breakout is underwater, or sold in this breakdown is underwater, but still most of the players who traded in this region have the close somewhere around their entry price, and they might not be very alarmed by this close. So apart from anybody who has sold here, they might have already covered in this gap open, forced to cover. If not, then these are the only traders who are worried, any shorts which were created in this region. So for the day, you can say that the inventory is balanced, and again we are placed with no clear you can say signs. The only thing which can be taken out from this is this failed auction or failure of the prices to continue higher after the initial P formation. That tells us that buyers may not be that eager to take the prices up. But since this trend is very strong and we have closed above this 8,800 level, many traders who had this level as their average price may be under pressure, and acceptance above this particular resistance tells us that bulls manage to, create value above it, and that is good for them. Had we rejected here and created value below this resistance, then we might have said that the bears have taken over and the bulls have failed to take the price up. But since we have value above this particular resistance, and we have sort of a rejection or excess at both ends, this still remains pretty indecisive. So again, I mean, potential auction paths, of course, these two levels become crucial. Above this, sellers will give up. Below this, buyers will give up. If we trade below and take this particular level out, or maybe come down, test the point of control, and then move down, then there is every chance that we might test this particular point of control. And then we'll see if the buyers are just testing the strength of the sellers at this level, and again we'll mark the prices up, or will give up altogether and fall down. I mean, buyers have to take this level out to find any continuation higher. Because this level was rejected pretty sharply, it means that buyers are not interested at higher levels. So where the value develops tomorrow will be crucial. If we find acceptance in this region above this particular resistance zone, then we can say that this resistance is conquered, and we might then again move higher. So we need to see how any effort to mark prices up fares tomorrow, whether the efforts to mark prices up succeeds in developing value higher than this value, or do these efforts fail to gain any ground and just develop an overlapping value. Overlapping value will be indecisive, and we cannot be very sure whether the auction will take higher path or lower path, just like it happened here and we saw a breakout. So balancing inside today's value, I feel the profile will be squat and develop sideways. But if we try to take out any of these levels and succeed, then we may see continuation. But a failure here will most probably try to close the gap on the second day. And again, a second attempt to close the gap, if it fails, then we are sure to test the persistence of any selling that happened in this range. This excess, we will test this excess. So we have been rallying for a while now, and the rally looks overextended. That is what happens when prices rally and nobody is ready to believe, and it just keeps going higher and higher. Reference wise, the next reference I have is 8850, and above that I have 8900 and 8950. So these references I have to the upside. I don't know how the auction goes there, but definitely if it opens here and consolidates, then we'll have another balance. And if it fails somewhere in this region, then we might try to close the gap. So I'll take it forward as we open tomorrow, because open will be important. Where it opens, what side it puts under pressure at the open will have to be seen. Coming back to the question, let me just read the question once. Question was, can you elaborate the concept of price hitting the open area when the P and V shapes are formed? Okay, fine. Yes. So whenever a P formation or a B formation is happening, what it tells us that the early enthusiasm of, in this case, of buyers was met by equal opposing force, that is selling. This happens in two cases. Either strong sellers come in and stop this rise, and the second part is when the buyers become exhausted and new buying does not come in at higher prices. In that case also we get a P formation. So that is a very important distinction which we have to make, whether these sellers are for the long term and whether this is the smart money. If this is not a smart money, what happened today will generally happen. Like had this been smart money, what would have happened, that after this failed breakout, we had to repair this low, that we did, but then it would have went on to close the gap and further lower and close somewhere inside this 2-day balance. Just to be clear that this was a failed breakout, and we have given up on higher prices. But since or if this was because exhausted buyers at higher levels, we generally get is something which is called as an inventory adjustment break. And there, what the market is trying to do, auction is trying to do, is just to take out stop losses below the low. Since the open was pretty close to this loop, the low became important. And as soon as the auction took out these stop losses, it immediately reversed. Why this happened? Because this was not fresh or new money or smart money selling, but just that buyers getting exhausted after such a big breakout and were unable to take prices higher. When this happens, any late laggard longs in this region need to be punished, and that is what happens when we get this inventory adjustment break. Once these longs were out of the system, smart money stepped in and again closed the prices back into this value. So this particular action stops me from making any bold statements that there is a top in place or we are sure to test this point of control tomorrow. We'll need to see whether we find acceptance in this particular single prints tail above it or not, or just continue building value in this region and do nothing. So I prefer or maybe I would say that a failed auction above this excess would be nice, but if we find acceptance in this zone, then there is every likelihood that we'll test higher references. So I think that is today's analysis. Hope I have answered the question. If not, you can always get back to me on Slack and try to clear your doubts. I'm always there. So thank you for watching, and see you tomorrow.